So big one from me today is all on tax. Tax has been a question that I get asked a hell of a lot about. I just think with the way sort of global markets are going, people are often thinking that the UK actually doesn't have as good a tax system or structures or benefits than other jurisdictions, other locations. While some of that may be true, there are still opportunities within the UK system and structure where there are some good tax savings to be had. And when we look at it specifically from a property point of view, and I would add in, I'm not a tax advisor. If you want to go and get tax advice on your specific situation, go out and speak to a qualified tax advisor and get their views. And there's a number of people we would be happy to recommend across that do a very good job in that space. But in terms of overseas investors looking to purchase property back into the UK, there's a number of things that you can do to help mitigate your tax positioning and just make sure that you are benefiting from the most sort of up-to-date, most streamlined process possible. Firstly, you've got corporate structure. So you can establish a UK limited company. Limited companies, now one of the biggest creators of limited companies is in the property space. That's been similar sort of trend over the last 24, 48 months. Obviously you get lower corporation tax rates, the potential inheritance tax benefits that potentially come with that, and then you can separate personal and investment assets across as well. So helps streamline, keeps it quite simple, and there's a fair amount you can do with that. Setting up a limited company, we work with a number of providers that do it. It's very straightforward, very easy, and then helps you add on. One top tip for that is if you are setting up a limited company, I would put more names on it than you think you'll need. Wife's names, kids' names if they're over the age of 18. If you're buying friends, families, whatever it may be, add more names. It's easier to take them off than it is to add them back on. Other areas where you can look at sort of mitigate tax is on capital gains tax management. So you can use your annual tax-free allowance of now £3,000. Unfortunately, that got reduced a year or so ago. But obviously if you use your wife or partners or husbands, then you can obviously increase that up to £6,000 as well. And then you can be fairly strategic in terms of sales across multiple tax years. So it's worth, again, speaking to a tax advisor to work out when you can time that so you can make best use of that, those tax year systems and play that into your advantage. You can offset investment costs against gains as well, and consider sort of spousal transfer of those opportunities like I mentioned. Then in terms of mortgage interest relief, this changed again a couple of years back, whereas you used to be able to offset everything, now it's limited. But you can claim mortgage interest as a business expense. Through a corporate structure, you can provide sort of more deductions on that, reducing your overall tax liability, and then you can offset some of that rental income as well, which is a big plus. So but the big one is stamp duty. Obviously, stamp duty has changed a number of times, most recently back in April of this year. But there are ways, and especially when we're speaking to certain people that are looking at investment. For example, you could buy a property in London, you might be spending 1 million, 1.5 million quid, whereas it might actually be beneficial if it's an investment to go and buy 6 units in the northeast at a similar sort of value, but then you're paying commercial stamp duty rates because you're buying 6 or more, and you're only paying 5% as opposed to the 17 you might be paying in London. So there are some opportunities there that people can pick up on. Again, strategic property timing can play into this, and then potential exemptions for certain investment structures and the way you do it, and what the property looks like, whether there's any retail in there, commercial in there, etc. And then rental income efficiency. So you can claim legitimate business expenses, professional fees, maintenance costs, property management expenditures, travel related. So a number of our clients are often traveling back to the UK with partners, wives, husbands, so you can offset all of those costs. So there are opportunities within specifically the UK market to maximise on your tax efficiencies. So we partner with, as I said, a number of best-in-class tax advisors. So if you want to get further advice, I'd highly recommend speaking to those. But really what I wanted to highlight is often the UK gets bashed as sort of overtaxing, overdoing, and don't get me wrong, I agree with many of those points, but there are still opportunities where you can offset a lot of what you would be paying so that it's not necessarily as bad as you may initially think. So get in touch with us today, we'll be able to talk you through the basics and give you an understanding, and then can go from there.